The Lord Jerome giveth, and the Lord Jerome taketh away. Welcome back to yet another portfolio update, and welcome back to yet another negative portfolio update, as after a brutal day a couple of days ago, it was actually would have been Tuesday of this week. This video should be coming out on Thursday. We had something like a 4 or 5% drop in the S&P 500 following some less than great CPI data here in the States. So things aren't looking too great in the market, but then again, this whole year has been pretty brutal and my portfolio has not been spared. And if we go to the 1 year view, things don't look all that great. We're down something like 30% on the year on a money weighted return, almost 30%, 27.5% actually. So yeah, it hasn't been all that fun when we're looking at the actual account value here. And it is kind of crazy seeing $24,000 in the red when it was actually in the green really not all that long ago in the grand scheme of things, but I guess such is life in the markets. And looking at my holdings here, you'll notice that all of these are red, which isn't necessarily true because I actually reorganized this portfolio. M1 Finance now allows you to move things out of your individual pies. Before you'd have to call support and they would do that for you. But now you can actually do it yourself. So I went ahead and reorganized this and got rid of some of the sub pies, sold off a couple holdings. Like I got rid of Dropbox completely, which was a small holding. But I've sort of taken it all out, and the only sub pie I have in here now is metals. These have done quite poorly in the last month, at least the gold miner ETFs, which I'm tempted to sell at some point in the near future because I am considering raising some cash for other things, potentially even outside this portfolio. And I do want to talk about why you might want to sell from your existing portfolio at some point. I'm not saying I'm actually going to do that, but I do want to take some time to talk about it. But first, let's keep going through some of the holdings. But in general, you can see that things have been reorganized. If you want to copy this portfolio for whatever reason, not a recommendation, you can do whatever you want to do. But M1 Finance does let you copy other people's portfolios. I include a link in the description of every episode of this series if you want to copy that episode's actual updated portfolio. And M1 Finance is free to use, and if you use my affiliate link in the description, it would go a long way towards helping the channel if you end up funding your account, because I might get a small commission, and hey, that would be super awesome, and maybe you could get a little better performance in the meantime. But anyways, because I reorganized this portfolio, it reset the money weighted return here on the gain return portion of this sort of interface. So that's why everything is red, because everything's been red since I changed this in the last couple of weeks. So that is why it looks like that. There's a couple that haven't actually been moved, like the X Yield and also Berkshire B shares that I have here. Those haven't moved, so these are actually accurate to the last month. But anyways, I wanted to talk about why you might want to actually sell stocks in any situation. Just some of the considerations you might want to make before you go and do that, because really buying and selling stocks and then holding stocks, there's a lot of emotion involved, and you want to be rational in making your decisions. So what would be a rational reason to sell a stock or sell off a stock portfolio to go and do something else? Well, I'm kind of alluding to the first answer, and one would be to actually go for a different opportunity. If there's something else you could do that you think would be better for your portfolio or better for your overarching financial position, then it makes sense to sell and move that money into the other thing. It's about opportunity cost. Is the opportunity outside of the current stock that you hold, is it better? Because there is a cost to holding. The cost to holding is not being able to do the other thing that you could do with the same money. So that is the first major consideration. It's really the chief consideration in any financial decision. It's opportunity cost. Really any decision. Everything is about opportunity cost, because every decision, and that includes non-decisions where you don't do something, every decision has a cost. So in some situations, it might make a lot of sense to actually sell off your existing stocks to go and try and buy something else because you think that opportunity would be better for you. And in my case, this is something I am thinking about a little bit seriously. I'm not close to making a decision like that at this point, but I am considering selling my public stocks because I'm trying to take down a private business. I'm making offers on businesses, or at least I'm in the middle of trying to get one right now that I think I'm going to be pretty close to getting, or we'll see what happens and I'll keep you posted on the channel. But if I wanted to raise cash for that deal without actually going to other investors or lenders or something like that, one thing I could do is take from my existing holdings. I have my stock portfolio right here, and it's not all that huge in the grand scheme of things, but right now I have $82,000 in portfolio value. That money could be used to go and invest in another business that I could potentially make a much higher cash flow yield in the meantime. Maybe I can grow that business in a big way and have a lot more equity yield as well based on the multiple that that business might get if I can make it better in some way. So if I trust myself there, if I think that's a better opportunity, then maybe it doesn't make a lot of sense to hold on to the stocks. So it's something I'm weighing. Right now, I don't really think I would do that, but it is an option, and I need to make sure I remember it's an option because yes, I am a long-term investor. At least that's what I tell myself. So I want to hold these stocks for the long term. Really, any investment I'm going for, I want it to be a pretty long-term thing, talking about multiple years, if not even decades. That is the idea going in. Of course, things can change, but that doesn't mean I have to pigeonhole myself into a particular investment just because I said on YouTube that I would hold it for the long term. If there's a better opportunity somewhere else, I need to go for it. And if that's the best decision for me to make, then that's the best decision. But before I move on to another reason on why you might sell stocks, I do want to emphasize that I do borrow against this portfolio, and that kind of mitigates some of the opportunity costs of having my money in these stocks if I think there's a better opportunity elsewhere, or if I want to invest in a real estate deal, for example. That's what I did very recently. I bought my house and then moved out of my old house that is now becoming a rental. I pulled some margin out of this portfolio to then use that for the down payment, fund some of the rehab, fund the closing costs. Well, really not much of that. Really just the down payment is what it covered, which is great because I was able to keep my stocks. Well, maybe not great in the short term based on the market value, but I didn't have to sell those stocks, didn't have to trigger a taxable event. I'm hinting towards the next reason. But that's one way to limit the opportunity cost of staying fully invested is that you can actually borrow against your stocks. But of course, there's a cost to that too. You have margin risk you're introducing into things and that you could get margin called. So that's something to worry about. You have interest costs as well. So it's not like it's a free ride. There's no such thing as a free lunch because every decision has a cost, remember. So taking on debt has a cost. So that is one way to take money out of your stock portfolio without actually having to trigger a sale. But anyways, the second reason I'd want to point out for why you might want to sell a stock or your stock portfolio is because of taxes. When you sell a stock, at least in a taxable brokerage account, you're typically triggering some sort of taxable event. If you have a gain on that stock, you're going to have to pay taxes on that gain. But on the other hand, if you took a loss on the stock, you might actually be able to take that as a deduction on your taxes or as a way to offset your gains. However, there are limitations on how many losses you can take in a year, at least in the US. There is a cap to that. Definitely talk with a tax professional, but that is a potential reason why you might want to sell. Maybe you locked in a bunch of gains on a stock that you thought was worth selling for whatever reason. So now you have this big gain on the books. You want to offset that gain by selling some other stock that you have at a loss, and you're sort of harvesting that tax loss harvesting to offset the gains elsewhere. So that can be a good reason to sell, even if you might actually kind of like the stock that might be at a loss right now. But if there's something else you can roll it into and you're able to lock in that loss to offset the gains, you just saved a bunch in taxes without really limiting the value of your portfolio. You're just moving it into some other portion of your portfolio. Or maybe you do want to cash out the portfolio, you still get to take that loss against your other gains, at least if you had any gains. But taxes are another reason you'd potentially want to sell a stock, especially in the case where you have a loss and you're able to offset a gain. That's something that's very commonly focused on and used by some of the bigger investors in the world. And the same strategy can be used by many smaller investors depending on how your portfolio is constructed. Now, the third reason you might want to sell a stock or some portion of your portfolio is because of valuation. It's the same reason you might want to buy a stock because you think it's cheap. On the flip side, if you think something is expensive, you're more likely to sell that thing, and rightfully so, because you think it's expensive. So you're selling it to someone who is, in your eyes, overpaying for that stock because you think it's overvalued. So if it's overvalued for you, you want someone else to buy it from you, and you can get it back later potentially when it's cheaper or undervalued. That's why you bought it in the first place if you're using sort of the value investing fundamentals. So even if you bought a stock for the long term, if the valuation just completely outstrips what you think is justifiable based on the fundamentals, then it makes sense to sell that stock because it's overvalued. Take the money while the going is good, and then you could use it towards something else, or you could just wait or just leave it in cash. Whatever you want to do, that's one reason you might want to sell a stock if you think it's overvalued. And the fourth reason, which actually kind of goes back to the first reason I talked about, is the mental strain, the mental cost to owning a particular stock or a stock portfolio. It can be very exhausting, especially emotionally, to hold on to a particular stock. If you see it going up and down, there's a lot of volatility. That's one thing you have to worry about. And you're probably going to want to follow what's going on with the company. You want to see what the business is doing. Are they doing good or bad things based on your own judgment? You probably want to have some competency in whatever that field is. You want to pay attention to the valuation. You want to see what's going on with the balance sheet. You want to take a look at all these things. And all that takes time and energy and a lot of mental energy, really, if you're trying to become an expert on a particular stock. And even if you don't want to be an expert on a stock, it's going to be very tempting when you have money in it to want to look at it, which is both a good and bad thing. The bad part is you feel like you might not be able to control yourself. You want to look at something else, but I see what's going on with this stock. I need to look at it now. And that can be a distraction from other things. So that in itself is a cost. Goes to that return on invested brain damage idea that Bill Ackman has coined, in that there is a mental cost to owning something, especially if the portfolio position isn't very big. If you have a stock that maybe is a couple percentage points of the portfolio, it's a fraction of what you make in a year, then what is it really worth holding on to that stock when it's taking the same amount of mental energy as a holding that might be a few times that position size? So it is a reasonable consideration to make. What is the mental energy? What is the mental cost owning this thing? And to the opportunity cost point, is that mental energy taking away from other opportunities that you could be using that same energy for? So the mental and emotional cost of owning something is potentially another reason to sell. Since this does take a lot of mental energy to focus on and to keep up with companies or try to keep up with these companies, and a lot's going on. Then you have the volatility on top of it, which is just insulting to see another 8% down month. But hey, what are you going to do there? It is kind of exhausting though when I'm trying to focus on other things. I have my career to worry about, now trying to take down this small business of some sort in the near future that I think I'm getting pretty close to. And so that's going to take more mental energy. Is it really worth holding onto this portfolio when it really isn't all that big? Maybe it makes more sense to put that money towards something else that I can grow that money into a bigger pile. Then I have all this money to invest. Then I start looking back at public stocks again. I don't plan on being out of stocks forever if I were to do that. Again, not saying I actually will do it, but it's something I'm considering. So I kind of wanted to talk it through here. And again, there might be a pretty big emotional cost associated with selling the portfolio before it actually reaches $100,000, which was the whole goal of this series. So maybe I've boxed myself in. But anyways, I'd love to get your thoughts in the comments below. What are reasons that you might sell a stock? Things that I may have mentioned here or things that I may not have mentioned. There are other reasons potentially to sell. They might fit into sort of sub buckets within some of the general topics I talked about, but definitely would love to get your thoughts down there. And be sure to like and subscribe while you're at it. But until next time, take care.